The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, and my pleasure to be here on Monday through Friday in market days. And thank you, Steve, for a great lead in there. Don't forget Steve's webinar coming up this afternoon. Check it out on the front page of TFNN. Always a font of information. So let's just go straight to the markets. You're looking at the E-mini now up $1.50. Now, that's very important. Now, I've been a little out of touch. I've kept up with the Greek news, but at this particular point, my guess is that it's doing okay. Whatever the news is, it's not impacting the market negatively. And let me run the numbers, and then we can go through other details. And I'm going to go straight to the Dow, which is down 41 at 17,827. Had a very strong leg up the other day, going to 17,951. The 9-period moving average of 17,719 is really quite important because the Dow hasn't closed or even gone to touch the line, that 9-period moving average, ever since it broke out on the, was that the second or third? The 3rd of February. So that's very important. We're looking at the 120-minute chart, and that's got a U-shaped pattern. And it really needs to get to the Dow. It needs to break above early morning high of 17,890. And that'll be very important because what it'll say is it has a chance to retest for that double top formation, the high that was made at 17,951. Now, for me, the most important aspect is the market is holding okay. The Dow is now a little weaker than the S&P. And that's going to be important. You've got a couple of Dow stocks. For me, UTX not acting all that well here. It's very important. I want to see UTX get to 119.50 to 120 quite quickly without breaking into the 117s. Most importantly, what I'm looking at here is that the VIX index is right here. VIX index is only up 2 cents. And it has a pattern that looks as if it wants to make lower highs and lower lows. It will not have that pattern if it breaks above the high that was made at 19.28. And that was probably 3 days ago. Yeah, about 3 days ago. If it breaks over that level, forget it. This market has a real problem trying to make all-time highs. It's going to need more time. And also, if you're looking at the 120-minute chart, a very simple pattern is the U that goes to a double U pattern. So let me take this right here, move it over, and you'll see that it would be breaking down if there's a lower low below this, say, 15.80, and right now it's at 17.27. Otherwise, there is a chance that you could start to form, later in the day, if there's weakness, a U pattern, the second U on the right, if there's a move towards the 200-period exponential moving average of around about, I think it's 1858, yeah, around about 1860. Okay, so now let's go on. We've got the S&P, SPX.X, so right there. The S&P is trading at 2,068.66. It's up 7 cents. What's important about this, let me just move that U-shaped pattern right there. What's important about this particular pattern is you want to see the S&P break above 2,072.40. The moment it does that, it starts a leg B. I call it a gray leg B. I don't want to get into the details of that as part of the Chapman methodology, other than to say that would be a really positive aspect if it could close above that left side high it was made about 3-4 days ago. And in the 120-minute chart, what you're looking at here is the same U pattern that turns into a W formation is occurring, and it's saying that that whole resistance area of 2,069, 2,071, it needs to spike and hold well into the 275s, and all of a sudden you've broken free from all this resistance. Let's go on to the IWM. The IWM is the Russell I shares. Russell 2000. I'm going to move this away if you don't mind. Just move it over there. And what we're looking at in the daily is that you've made a PT, you've held the 9-period moving average. That's really important. Why? Because the MACD is still rounding, and the stochastics at 79%, almost at that 80%, what I consider to be better action. And the fact that it's holding here, the fact that the weekly chart, this weekly chart here in the middle, remember on the left is the daily, on the right is in this case, 120-minute chart, but there is the monthly chart. Look at that pattern, walking the 9 EMA, and right here is the weekly, and this weekly has been suggesting for quite a while that this is a fairly strong pattern, holding above the 9-period moving average, trying to break out. So I'm watching this closely because all that has to happen is that the IWM gets to 121.42, and suddenly what you're looking at is leg D in the daily and leg D in the weekly, and that'll portend higher prices later, but then we've got to start being a little bit careful. Remember we looked at the MDY for a couple of days now? The MDY is the mid-cap S&P. Well, it's acting quite well. And in fact, if the MDY this week goes above 270.33, right now it's at 269.32, down 5 cents. If it goes above that level over the next few days, that'll extend the weekly in leg C. That'll be very positive. And that, I still have to call the monthly not G, but a leg B. And that portends higher prices over the period of 2015. Now, this is very important. We're going to go to the NYA. This is the New York Stock Exchange, and you'll see that it has been lagging. NYA.X. It has been lagging, but most importantly, it has been making higher highs and higher lows in the daily, and the weekly has been improving. All I can say is that if the New York Stock Exchange, the very broad 1,860 or 2,000 stock index, is able at this point, it's at 10,890, down 24. If for some reason it breaks decisively above 10,931, all of a sudden you're looking at the chance that the next higher peak of significance made in the week of the 28th of November at 11,068 becomes a focus. That's really important because you're going step by step. This is a very interesting market, most hated bull market that I can ever recall. It hasn't given up anything yet. It instead has been rotating through the autos, through the auto parts. If you're looking at something like the IBB, which has been absolutely a stellar performer and is acting pretty well today, up 2.84 to 321.10. It is suggesting by the move that we've just seen today, in fact, even though it's very early, not even 2 hours into the morning session, it is hinting that it really would like to go to a leg D in the weekly. It was looking very poor up until even yesterday's close. But with today's action, it's suggesting that there is just a chance that there's one more flurry to the upside. It's impossible to believe that something is that has been strong for so long can maintain that strength. So we're watching closely because if by the end of the day, IBB, the NASDAQ iShares Biotechnology ETF, breaks down under the 9 EMA of 318, starts to close in the next few days under 316, 315, that's going to say, uh-oh, I don't want to participate in this rally. I just can't do it. There might be just a handful of these stocks that are carrying me higher, but I don't have the internal strength. But right now, I have to admit, even though that in my newsletter we are short, we're the opposite, the counter trend or counterpoint of the IBB, and it's been doing okay. I got to watch it real closely. Now, let's go to the next thing. I want to look at gold. GC. Gold is down sharply. It's down 9.9. You remember I've been talking about this for a little while, that the weekly chart is looking good, and then all of a sudden, the beginning of this week, I said, no, wait a minute, it's now under the 9 EMA. Monthly chart doesn't look good at all, but the daily chart is given back a little bit too much. It's got that look of 1-to-1, and then 1-to-1 again, a measured move, and now it's once again got this look of a 1-to-1. I don't know. This is saying, I've just moved away. I had a book in front of me that I want you to read something of. So, there are going to be a number of excerpts from different quotes I'm going to take for my webinar coming up a week from tomorrow night, Thursday night, the 19th, between 6:30 and 7:30 for subscribers. It's Eastern time, that is. And but you'll be able to get to it if you want to sign up, and you'll see just all the information there. It's free. And most importantly, what's going to happen is I'm going to show you the parallels between the 1928 period and the 1929 period. What's coinciding, what's not coinciding. What's so interesting that they actually lowered the interest rates. The Fed lowered the interest rate at that time, wanting gold to move higher, and there were specific reasons for that. They were kind of upset in 1929 that France was holding gold deposits, that France actually had a chunk of gold. It's quite complicated, but the machinations and how it all worked and the parallels between now and what the Fed's doing, we'll talk about that. And one of the implications, this really, what people want to know, if you want to know with your portfolio, looking out to 2015, what is the scenario? I like this scenario. Is there a match between 929, the top of 29, and what will happen here at some point? We'll talk about that. My gut feeling is that everything I'm looking at this particular moment says that this is a very important phase. It's a phase that's taking us into a coda phase, an accelerated phase, a period of recognition, very slowly a period of recognition, and that we're going to have to deal with it. We're going to have to look intensely at the dollar and gold, as well as price supports, as well as skyscrapers and all those other socioeconomic aspects that I always talk about. Now, I don't know if that was a call for me, but in the meantime, what I'm going to do is say that gold is looking poor right now. I want to go to bonds immediately. So we go to the TLT, the Lehman 20-year T-bond fund. I said the target was 129.04 by the 20th. Well, you know what? We're at 129.13, and already the low today has been 129.13. We're at the low of the day. It looks like we're going to get there a lot sooner than the 20th of February. And that is saying to me that regardless of what's happening in Greece, as far as the Greek situation is concerned, regardless of what's going on internationally, we really have to be looking at the United States market as U.S.-centric at this particular point, with money coming out of bonds and going to stocks. That's the way it's looking at this particular point. So we're looking at the TLT, and then I just want to do the dollar DXY. There we go. Dollar is, in fact, rallying some. It's getting to the upper limit. I'd say that I thought that 94.80 to 95.20s might be the limit, just if it's going to be in a containment area, a rectangle sideways move. Well, if that's the case, you will see the euro pulling back, which it is, but it's pulling back only slightly. It's down 0.0064 at 1.3113. So we've got a break coming up. I want to look at certain stocks and certain sectors. We'll do that when we get back. Basil Chapman, don't forget to sign up for my webinar Thursday a week, and it's going to be very interesting. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So I wanted to look at a couple of things here. Most importantly, I want to look at, for those of you who are perhaps new to my show, just listening in for the first time, not used to exactly what I'm talking about when I talk about the peaks, let me show you something here in this middle chart if you're looking at Tiger TV. If you're looking at this weekly chart of the Dow, it's gone from the lowest low bar on the 17th, that's the week of the 17th, it was actually the 15th of October, at 15,855. You've had a spiral to the upside, which went to a peak right there. We call it peak A. Why? Because the high was 17,603.89, and the very next day, the high was, I looked at the wrong one, sorry, 17,894.83. And the next day, the high was 17,893.42. Just like a point away, 1 point lower, but that makes a peak in my work. And it took me years to figure that one out. So the moment it breaks 1 penny above the high that was made for the actual peak of 17,894.83, and it goes to 0.84, that starts leg B. That leg B only lasted a day at 17,991 and pulls back very sharply. And then what happens, it spirals high and it goes 1 point above 17,991, and that makes leg C. That takes you to the all-time high in the Dow of 18,103 in the weekly chart. That takes you to leg C and then peak C. That peak C dropped very sharply. It went all the way down to 17,037, and that was made last week. And then there was a huge spiral to the upside. So far this week, we've not gone to a new recovery high. We need to go above 17,951.09 by 1 penny. And that would start another leg up. And that leg would count as a peak D if it goes to 18,103 points. Let's tell you right now what the point would be. The point would be 0.46, 1 penny above the 0.45 high, and it starts leg D. Now, the big issue in my work is this. Invariably, especially weekly charts, they tend to go to all-time highs in legs D before they have a substantial pullback. Doesn't have to, but that's usually where it does. Well, the Dow Diamonds, the trading vehicle for, this is the SPDR Dow Jones Industrial Average ETF. This is basically, it trades in unison with the Dow itself. It's a trading vehicle for the Dow. Can't trade the Dow index. You can trade the futures and you can trade the diamonds. In this particular instance, 180.71 was the all-time high, but that was only a peak B. So in my methodology, going from the lowest, most identifiable low bar, you want to go to 4 higher peaks before you start looking at other things, other directional moves. And in this particular instance, 180.72 would create leg C. But wait a minute, that corresponds to the SPY. The SPY is the trading vehicle for the S&P. It's called the S&P Depository Receipts, trading at 206.95, 87 right now, up 5 cents. That made a peak B. That was an aberration. That bar is very unusual. It's never been corrected. There was no trade there. I don't know why they haven't changed it, but there's peak A, there's peak B. So 1 penny above the high of the week of the 2nd of January of 208.97, go to 0.98, you start leg C. Now let's put this package together. That would imply that the Dow is a little bit ahead and that it might not give a major sell, not a major, but a serious sell signal in leg D. Why? Theoretically, in almost every time, the S&P and the Dow do this together. There might be different letters, but it's from D, E, or F. It's from D or higher that you get a very sharp pullback. The pullback that I'm expecting perhaps in March, it'll be very sharp double-digit move down. But that would imply that going into mid-February, we get this leg C to the upside, just above 208.97, and that starts leg C. And then it would take a full week of lower highs to make peak C, and then we should get leg D. And at that point, you might get E in the Dow on the weekly chart and D in the S&P, and then we might be ready for what? A pretty decent pullback. Let's go to Gary. Is it Jerry or Gary in the Back Bay? Who am I speaking with, Jerry or Gary?
Jerry.
Hi, Jerry.
Yeah. Yesterday, I made a mistake. I told you WTI oil,
Yes.
and you did WTI the stock. So I'm basically interested in USO. Well, I get WTI by putting a $sign and WTI, and I get a chart.
Oh, I see. Okay, all right. We'll be back with Jerry in the Back Bay, and we're looking at USO, which is the United States Oil Fund, trading at 18.45. I'll be right back straight after this break. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 40. This is a very interesting market because for about 3 months, we've been looking at a number of days where the Dow and the S&P are not in sync. They're actually quite far apart. This is, to my eye, having done this for so long, that is very unusual. They usually move pretty closely in pairs, with the Dow on a percentage basis slightly less than the S&P. So we're watching this closely. But right now we're on with Jerry from the Back Bay, and we're looking at the USO. You know, Jerry, it's so funny because I'm still not able to squint and see exactly what WTI is. But WTI had exactly the kind of pattern that we were looking at. WTI, let me just get that right, that we were looking at, and it says here something about, can't even read it, WNT Offshore Inc. So it's funny because...
No, I'm not interested in that. I'm interested in the price of oil because I think it's going to...
Me too.
I think it's going to break down to a new low. And some technicians are saying it's already turned.
Yes. Okay. So this is look at USO, which is the United States Oil Fund, LP, and it actually it tracks quite well. Let me just put the CL continuous. Here's the continuous contract, folks, and here is the USO. You'll see it tracks it. It's the best vehicle you've got to move very close to parallel. The only difference is that some of you might not be able to trade USO on the off hours of the market. Some people can trade overnight, but others, just their software that they use just doesn't allow it. from the brokerage account. Now, we're looking at USO, which is down 49 cents at 1846. What I'm looking at here is the pattern in the 120-minute chart, which is really, this is just a perfect example of a spike higher, a gap down, and then that rectangle formation that I always talk about that says from the low that is formed, it is possible to have a price movement that goes sequentially higher to peak A, B, C, and even a D, sometimes even an E, all within the contains of the rectangle and going toward exactly to or just a tad above the previous left side high. And in this particular instance, the USO went on the 120-minute chart, it's the same as the 60-minute, but the 120-minute chart went to 20.29 at 15:30, so 15:30, that's 3:30 in the afternoon. This is on the 1st of February. It then gapped down, pulled back very sharply, well, very sharply for this particular move to the upside, gave back 50%. It went right down to 17.95. And then what did it do? It went peak A to the 200-period moving average, peak B above it, peak C, peak D. And where did peak D come in? It went to 20.18. What was the previous high? 20.29, 11 cents. That's the difference. I've found that it happens so often. It is such a remarkable technique, this rectangle formation, that it's done its job beautifully. And what is the result? It says that when it gets to the top of the trading range, as it looks like it's about to break out, it reverses, goes back down to the bottom, looks like it's going to break down, and could fool you a number of times as the rectangle formation becomes the dodgem car, the go-kart, the boundary lines that contain the price. And what happened? The low was at 15:30, 3:30 on the 4th. It went to 17.95. And this morning, what did it do? It went down to, is that this morning? At 11:30. Yes, today's the 11th, right. It went down to 18.01. So let's do that again. It went to 17.95, 18.01, 6 cents, and now it's trying to bounce. So this is what I'm looking at. The reason why I made a big deal about this fussy little move that it's had is because what I had said yesterday is that this is a chart formation that I'm very familiar with. I don't know if it's going to result in what very often happens, but what I'd said to you is look to me that USO, that oil itself, based on the 9-period exponential moving average, needs to pierce the 9-period moving average in the weekly chart, which is now at about 1987, but it needs to climb above the 20.29 high. As soon as it does that, it'll be the very first time, and I love looking at things like this, it'll be the very first time, and this is just a fantastic demonstration of the power of the 9-period exponential moving average plus the MACD breaking down. Once it broke down below the 9 EMA in the weekly chart back in July of 2014, the week of the 11th, not once has it closed above that 9 EMA, and only once has it spiked above, and even then it closed sharply lower. But what I'd said to you was that the histogram of the MACD is starting to improve. The MACD is starting to make there's a narrowing of the green line, the fast-moving average, and the red line, and the stochastic is slowly improving, and that you have to have, and that price is really the arbiter of a trend. So it's all very well for me to say to you that it looks like something's going to happen, but until you start to get a price movement in the 20.50s for USO crude oil, this is all the testing of support rather than the breaking of the upside. Now, is your suggestion that you think before we get higher, before we can get to the 20.50s, that we could retest and probably break the most recent low of 16.30?
Because the inventories are going to build dramatically in February and March because the refiners shut down for changeover. And then it's the lowest period of demand, and yet the Saudis are producing full out. So I think you may run into a situation where you run out of storage space. Right now, people are buying the front end and selling the short end and keeping it in storage.
They wouldn't use shippers, right? They wouldn't use shippers to store it because that would just be, they'd be paying rates forever without using it. So they have to. What would they do then? Just lower the price and try to use more?
They hold it for like it's 8 months, and they pay the storage, and then they sell it. The outward is selling for like in the 60s. So they make the calculated return. But if they run out of storage, then the market takes over, and there's like you go to sell it, and there's no buyers. It's like
and then prices plummets.
Yeah.
Right.
Yeah.
Okay.
I think if it happens, it's going to happen between mid-February and mid-March, which is the low period of demand for oil.
Okay. So let's look at it that way. That's the fundamental angle. The very short term, the only way that I could see this as being very negative right now is if two things happen. Around about 1725 to 17 support gets taken out, and then instead of bouncing off the 1620 level was a 1620 or 1610. 1630 level was the low of the 29th. Instead of bouncing strongly, this is the pattern that I've seen very often that is the start of a very nice 2 to 3 week move to the upside. But it has to, I'm talking time now, I'm not just talking price. It isn't just the price of getting to the 1950 or preferably 2050 area. It is doing it by, today is Wednesday. By Tuesday, this coming Tuesday or Wednesday, I'd say Monday to Tuesday at the latest, it needs to be pushing into the mid-20s, because if it doesn't do that, that weekly chart is just going to get weaker and weaker. So I
understand. Oh, very, very nice. Thank you very much.
Yeah, so at this particular point, for those who are a little bit bullish, the US oil, the very best bet would be that you're in the rectangle formation in the 120-minute chart. That implies that you just cannot close below 1795, because if you close below, you've changed that pattern, and you want to see 1892 hit by this afternoon or by tomorrow at noon. By tomorrow this time, you must be above 1892. Then you can just go into this trading band, very narrow trading band, with a chance of retesting the high up in the low 20s. But those are parameters. And I have to tell you, from the chart I'm looking at, this pattern becomes very bullish if there's a breakout to the upside within just a couple of sessions. I don't mean very bullish longer term. I'm talking about short term, to be able to get to the 20.50, 21.30 area. If it doesn't happen with the next few days, it's lost its opportunity. That momentum will just wane.
Well, thank you very much. That was very detailed and impressive.
Thank you very much, Jerry. I do appreciate you calling always. Thank you for calling. So, and I hope that we don't get the snow tomorrow night so I can arrive back safely. So let's look at this in terms of the VIX index. VIX, and of course, Stevie's doing a show this afternoon on the VIX index. Now, I've used the VIX index every single day for the last however, now 15, 20 years, whatever it is. And what I do is, for my subscribers, I show the VIX, the volatility index, like this in this quintile. I always say, out of the five diagrams that I have over here, this is the 120-minute Dow. It needs to break over 17,951 to start leg C in the 120-minute chart. This is the VIX, the volatility index. This is the volatility index that I make it as simple as possible. I call it buying pressure or selling pressure. Selling pressure, if it starts to rally, it'll be selling pressure in the marketplace. And if it starts to decline, that's buying pressure in the marketplace. In other words, at this particular stage, it's just holding at 17.24 up a penny. But if by the end of the day, the VIX index starts to travel into the 1690s or lower, this market will quickly go over 17,009. I wouldn't say 951, but certainly, maybe 17,951. At least it'll have a good attempt at getting there. Let's just say that it'll get 17,920s. That's really what I should have said, because I don't know if it'll break out as quickly to the upside unless that VIX is holding low at 3 o'clock and then holding low on any pullback at all in the market. If there's no corresponding VIX selling pressure, that is selling pressure in the VIX itself, this market will push higher. Now, it's very interesting. You had some nervousness this morning. The Dow was down. The S&P was not down as much, but the short-term trading index went all the way to 1.47. So that Richard Arm's trading index is starting to show some signs of life, but what's going to be very bullish if it starts to pull back towards 0.93, 0.87. I know no one ever looks at the short-term trading index, and I only use it for certain numbers that I've made up from my own proprietary techniques. And this particular instance says that if the short-term trading index drops about 20 cents from here, that should become buying pressure for the general market. So I said I just also wanted to look at some stocks. Let me show you something here. I didn't want to move there. Let me just see a quick question in the den. All right. So let me go back to these little quintiles first. So that's the 120-minute Dow. This is the 120-minute VIX index. This is the short-term trading index, and this is the Dow and the S&P daily charts. So this is a set of quintiles right there. Is an incredible amount of information. I use it for my overview and market today. And now let me show you something else. I will get to stocks, but while it's here, I wanted to show you. You see this pattern, this mirror image between the SPY, the S&P depository receipts, and the SH, which is the short-term pro shares, I believe, trust short-term short, 100% short. Look at that mirror image, and it's saying that it stopped making that inverted to make an oval formation, and now it's gone back to a kind of a rectangle formation. And it's also saying that the selling pressure in the SH has been fairly strong, and it could be retesting the most recent lows as the SPY starts to retest the most recent highs. Now, here's another thing. The long-term chart, I just want to show you of bonds. Bonds up again, yields is up again, 25 cents at 25.96 for the 30-year T-bond fund. It's gone above all those highs over there. And that's saying that we've got to respect the decline in bonds that happened, and now the rally in bonds and the rally in the rates. This is the 30-year right here, the white one. That's the 10-year T-note rate, and that's the 5-year. And they're running quite strongly, very strongly off the most recent lows. So that's saying to me that I cannot rule out that money is flowing from bonds into stocks, as well as you've got the European, you've got Japanese saying that we want to be buying stocks. We're going to be buying Japanese stocks. We're going to be buying American stocks. There's a lot to talk about when you are looking at major influences of buying. Because if you have governments, it's just like the dollar, it's just like currencies. When you get governments behind the buying or the selling, it can last for quite a while. This is not just a fund, a mutual fund. These are governments with mega bucks behind it. So that's, I think, another reason why the Dow is holding up fairly well. Right now, the Dow is down 30. And it's really having a difficult time breaking up, but it's also having a difficult time breaking down. I'm talking about today. So let's look at Google. Spoke about Google yesterday, and I said it's bumping into the 200-period exponential moving average in the daily chart. The weekly chart is starting to improve, but it's not great. It's just improving. And how it breaks that resistance, it can try, if it can go above 542, that'll be a positive. Well, we've got a break coming up, folks. Basil Chapman, Tiger Technicians Hour. And what did I say? The Dow's down about 29, and we'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi folks, we're back, and I needed to look at the platinum to show you that platinum is making that pattern I call the Eiffel Tower, straight up, straight in. It looks like a capital A. Not good. High-grade copper should be doing something better than this. It's at least holding okay, but it's really not showing strength. And that is national and international building. It has to do with the economies. And if it's not really performing all that well, you've got to say, hey, well, what exactly is going on here? To me, this really smacks of, when I look at it and I'm saying, okay, so you've got some isolated moves. You've got Amazon right now. Let's see, what is Amazon doing at this particular point? It's up $1.36. It's about to test to try to go to a leg D in the daily. Very strong leg B. Is this more than a counter trend rally in the monthly chart? Well, it's very difficult to say because a lot depends. If this really is B in the weekly chart, because it's under the previous high, it could certainly fail. But at 374, if it was to trade in the 381 to 83 area by Friday or Monday, that's going to suggest that it wants to go and retest the previous high, 408.06. So you can see that we've got rotational strength. When we looked at price line before, price line, not great. This is really not a very good chart pattern. So in the former big winners on the NASDAQ, you've got very few that are actually going towards all-time highs, but you've got a rotation that says some are holding very well, and others are not. They're failing. They're not acting well. So I heard something about Baidu recently. Baidu, of course, Chinese, should be doing very well. It's at 215. It's down 4. It looks to me like it's kind of stuck. I don't know why I haven't got it all notated here. A, B, C, D, D in the monthly chart. If Baidu trading at 215 starts to trade instead of trading at 222 to show that it has 222.25 to 222 to 225 in the next 3 to 5 sessions, instead it starts to break down below 212, it says, hey, I'm going to test that recent low that was made, and I could even hit 209, which is the 200-period exponential moving average support. So you can see that this is a very selective rally. That's the reason why I think that we just squeaked the nominal new highs. Not we. The Dow and the S&P squeaked the nominal new highs, have a kind of a rectangle pullback that says, oh man, this is so frustrating because we're going to break down, then it finds support and goes back to the top and doesn't break out. And then finally, 2 weeks later, after it makes, or a week and a half later, after it makes that leg D in the Dow and C in the S&P, you finally get a move to the upside, still contained, just nominally new highs. And then perhaps we start to get a pretty decent pullback for 6 weeks, maybe 8 weeks, and then start a brand new move to the upside. That's kind of my thinking. And I just wanted to follow through on that. So when you've got stocks like an American Express, which had been doing fantastic, springing to brand new highs, and out of the blue, it pulls back very sharply and doesn't seem to be able to get out of its own way. A MasterCard doing the same. Of course, they really had that going into the holidays of December. They all performed well, MasterCard and Verizon, and Visa. Now they're kind of in a holding pattern, although MasterCard looks a lot better at this particular point. So I just wanted to say that even in my Dow quartet, GE is acting okay, not great, but acting okay, which is giving credence to the market, just managing to push higher, and where we need 200 points or something or less to go to the all-time high. And IBM is part of that crew out of the Dow quartet, acting okay. It's a nice bounce off the most recent low below 150 and now at 158. But the weekly chart and monthly chart are not good at all. And then you've got UTX, Triple M. That's my third one, Triple M. Triple M has gone to a peak E. How it manages to go to a leg D at 168.17 is going to be the issue. And you've got UTX pulling back a little bit today. So it's a mixed market with my bias being to the upside for another couple of weeks, and then be careful. Hey, stay tuned for Larry Pesavento. I'll be back tomorrow. Have a great day. Thanks for being.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.